Hello, everyone. Hope you had a wonderful trading week. And we're going to have the holidays coming up here at the end of the year, capping off with a few trading days left for 2019. So let's just go ahead and start off with the dollar, and then I'm going to treat all of you to a little bit of a holiday present. From me to you, just kind of elaborating a little bit on something that I've noticed and shared with my members. I'll share with all of you, my dedicated subscribers. I appreciate all your support and comments over the past year. And I'm also going to do one better, another present. Anybody that is interested, all you have to do is, if you are interested in seeing what one of my member videos looks like, absolutely, no strings attached whatsoever. I can go ahead and send you last week's member video just so you can see how I formulate, how I speak, what I'm looking at, some things of that nature. All you have to do is just send me an email, thetradersperspective@gmail.com. I will respond with the link to the member video for last week's session, and then you can kind of just take a look at what it is that I look at, how I look at things, some of the things that I say, some of my thoughts, etc. So that's just my little gift to all of you. So the gold is what we'll be focusing on in detail after the dollar review is completed, and then at the conclusion, if you after you've reviewed this week's public video, you're inclined to check out my member video that I put out last week. Then I will, as I said, all you have to do is just send me an email. I'll go ahead and respond and just send you the link to the private member video, and you can go ahead and take a look at it. And if you have any other questions, obviously you can go ahead and reach out to me. And as I said, there's no strings attached. Just figured I'd throw that out there. A little bit of a give back to all of you for subscribing to my channel, commenting, and any emails that I've gotten from you. I really appreciate all your support. I just I am very passionate about trading. This is something that I love. I enjoy it. To me, there's no better way to have a living. So in any case, let's just go ahead and jump into the dollar here. Starting off with the weekly. Last week I was looking at dollar to push down to at least test the lows, and that was around 96.88.5. We pressed down to the lows of around 96.60, and then sprang right back up. Now, those of you that have your own charts and setups and things of that nature, and obviously on my personal templates, I'm looking in more detail, of course. So, basically what you have here is a retest of a breakdown here, which kind of, go like that. Just kind of offhand looking at the weekly time frame view, right? So, again, we pushed up into this area. I think that this is probably going to be the top here, even though it's a pretty bullish looking candle here for the weekly. I think that we're going to go ahead and just continue to see that pressure building. So I'm just going to go ahead and adjust that a little bit here. And I do think that we're going to go ahead and retest this zone. We'll probably push back up again here into 96.88 or so, 96.90 as I have it marked, and then we'll continue on our way down here. Now, I don't think that we'll be seeing this big break until we fail at this point. So I'm just going to update this to basically indicate that after this we'll be looking for 90 96.30s. Just update that. Swing up here to test the break again, and then that's when we'll start looking at still not quite ready for that one. Look for the test here right at 95, 97 area. We do have a gap to fill down here, so it wouldn't surprise me at all to see us kind of spring down here and then pop back up for a little fake out and then get that plunge going. And again, this is the weekly time frame view, so this is going to take some time to materialize into this lower area here, I assume. Now, it may just turn around here and just grind all the way down. Depends. But as we head into obviously the end of the year here, I don't expect too much fluctuation. So again, we'll probably recheck here near the 96.88 level, bounce around in here, chop fest, and then start breaking down lower and lower as we head out into the future. So that's what I see here for the dollar index. So I'm just going to go ahead and save that so we have that for next week's future references. And I'm going to go ahead and change up templates and show you what I'm seeing with gold. All right, so here is spot gold looking at the weekly time frame view, and so what I did was kind of had a little bit of an epiphany a few days ago, and then it kind of was reinforced when I saw a headline pop up regarding gold seasonality. So what I did was after taking a look at spot gold going back in time all the way to 2007, I basically took the lows to the highs, specifically targeting middle to the end of December up through the month of January, and some of which of these boxes extend into February or beyond. For example, this complete melt up here was much larger than the other boxes that we have here as far as the amount of time covered within that run. So essentially, what I found was, and I'll go ahead and just read this off to you all. And this, I did share this with my members yesterday, as a matter of fact. Basically, over the 13-year period from 2007 to 2019, and again, this isn't precisely the exact measurement. So what I did was I took the price just a little bit off the lows, I took the price just a little bit off the highs, and did a measurement of the rate of return between, not the rate of return, the return from the like I said, around the middle to end of December through the month of January, and in some cases stretching into mid February to March ish. But most of the time it was into about the first or second week of February. And again, each one of these blue boxes is that measurement that I did take into consideration. And as you can see here, I do see the same thing happening in the near term. So I'll get into that in just a second. So over the 13-year period, what I ended up finding was that through the months of the end of that time frame, specifically targeting the end of December through January into early February, on average over the 13 years returned around 16.94%, which is incredible. And then if you look at the last 3 years, so 17 through 19, 2017 through 19, you're looking at 11.1%, 9.05%, and then 8.02% rates of returns over the course of the past 3 years consecutively. So that all being said, which again is very impressive, and again, this is one of my presents to all of you, is just how I think. My mind kind of goes off in different directions sometimes. And there are other runs to be had, of course, but I'm just specifically targeting how to start off the new year in a very, big, proper fashion, right? Given that the indices are extremely high, a lot of people are well aware at this point that there's an extreme sense of euphoria and greed in the marketplace. So again, gold is getting that bid support, as you can see here clearly. It's been supported and moving sideways, consolidating, getting ready for its next pop to the upside. So, and again, you can disagree with me all you want, but again, the stats are pretty convincing. So 16.9% over the 13-year period through this specific window of time is quite convincing. That again, and then looking at the chart, I mean, it kind of already tells you what's happening. RSI is also telling the same story, but enough of the RSI. So what I did was I took a hypothetical. Let's say we do a X% return, right? So what I did was I was more conservative, because I try to be as conservative as possible so that I have more realistic expectations of what I'm looking at as far as a return. So I took 1478 as the base price here, looking at the futures contract and also the close of the spot price here, and I did an 8.5% return through the month of the end of December through January, early February, let's say hypothetically, right? That amounts to a price target of around 1603, and that's just an estimate. It could be greater, it could be a little bit less, around 1600, right? So either way, you're off by 10 bucks, let's say, at the max. That would basically equate to a $125 move from where we are presently, which is, as all of you know, fantastic. So if you're looking to short gold, good luck. I'd say that the odds, from what I'm seeing across the board, is not only do I look at gold, I look at other metrics to kind of see what storyline kind of adds up. I'm like an Inspector Gadget type of a person. I look at one aspect to kind of support or discredit one theory that I'm having, or one setup that I'm having in mind, so to speak. So I'm looking for added credibility to my setup that I'm thinking of, right? So hopefully I just didn't lose some of you with that thought process, but that's just how my mind works. So again, when you're looking at gold here, spot price, and I know I did say this was going to be a Christmas present, didn't say that it was going to be a short one, or a holiday present, sorry. Trying to keep it as politically correct as possible, right? Don't need anybody saying anything nasty. So, with that all being said, let's just skip the crap. Looking at the price here, I'm thinking that we're going to start basing here. Very, very curious to see what happens at that 1470 level for spot, and on the futures contract, and I'll get there in a second, it amounts to around 1474. So if we hold the lows here, which again it would be the building a higher range of support along this level here, 1470 in this case for spot, you'll be looking for a breakout above that 1484 level. Once we consolidate along that 1484, the short squeeze kicks into effect, and then we have ourselves a nice little run. So if you're a conservative person, I try to think as conservatively as possible, but again, when you're in a great position, what do? You let your winners run, you cut your losers quick, right? So in this case, you get yourself into a stop loss protected situation where you're letting your position run up. Your first major hurdle here is going to be at that 1534 level, just because that's the way the fibs work, and I use them heavily. You might use something different, that's completely fine. To each their own. Trading is something that is completely custom to what a person sees. Each person can use tools differently, so again, always keep an open mind. If you see somebody posting something on social media somewhere and they're doing waves or whatever it may be, and I'm referring specifically to Elliott waves, you know, if that works for you, then that's fantastic. If you look at moon phases and planetary zodiac signs and alignments for price corrections, whatever it may be, who cares? If it works for you, fantastic. That's great. You know, 786 is a level that I respect highly. The market does as well. That usually means that we'll end up hitting this mark, pulling back to around the 50, maybe 38.2, which would be kind of an aggressive pullback given this overall bullish look. I think that we'd probably stop at like 1501, and then we'd do the continuation squeeze up to do a double top test and then squeeze further up into the 1586. So zooming out in time, you can see again that this 61.8 fib level I have matches up with roughly 1588 or so, with a extension on current highs to recent lows, putting us at around 16 and a quarter. That's a little bit higher. It's not to say that it won't happen. It is to say that it's possible. But when looking at the actual candles here, and I'm going to go ahead and just kind of zoom in and then shift to the left here. So basically, looking at the candles here and where we had some struggle, that put us around the 16, let's say 1612 to keep it relatively, within alignment here, with the real closes being around that 1610 area. So from 1610 down to around the 1590 area, that's a good area to focus on as far as upside targets. Either way you slice it, it's a significant move from where we are present day. So I think that all of us can agree with that. That's a very nice mover, especially from where we are sitting at present day, and with the stats to back up the moves that we basically been seeing. Now this move is not something that I included in my calculations, given that it happened in May. So it was actually this right here that was calculated. This was excluded. I should have thrown that out there earlier, but this is the move that was considered. This was not. This was just something that I was looking at as far as measuring, and then I just excluded it when I gathered up the stats. So that all being said, I am bullish on gold. I do think that it does continue to move to the upside so long as the lows hold. Now, if we do fail to hold the 1470, number one, I'll be very surprised. Secondly, the next level I'll be looking at for support will be that 1460 area, and I would also treat that as another buying opportunity. From a risk reward standpoint, it's phenomenal. Beyond that, if she happens to break down, I again would be extremely surprised given the timing of the year and the stats that back it up. It would go against 13 years worth of data. So again, I think the probability is on the side here, and you can even draw, just catching it with my eyes here. You could really just kind of draw that as a rising, higher lows, higher highs type of a situation, and now we're kind of consolidating on that 23.6 fib. That usually means to me that we're just about ready for liftoff to challenge the upside. That all being said, let's go ahead and switch over to the futures side. So one moment. Okay, so here we are with the futures. I switched my templates back up to the public one. And the spot gold one I was just showing you, I really don't do a whole heck of a lot other than just straight analytics off of a fairly naked chart. So that's why you see hardly any annotations on the prior template chart that I was showing you with the spot. So just want to throw that out there. So here is the layout that I think I put out maybe last week or the week before. I don't remember exactly, so if any of you have watched it, you'd probably know better than myself because I don't really check back too often. I just look at this, once in a while. Actually, just when I do my videos for all of you. So again, you can see that the outlook is still very well intact. It's been pushing up, trying to get itself going. There is a gap to be filled, and I know I'm going in a lot more detail today. And as I said, this is present to all of you. Kind of just gonna give back a little bit. Why not? It doesn't hurt. It doesn't do anything for me other than just kind of help out. And helping out is always a good thing. So when you have a skill set, it's always good to share your thoughts with others that may be a little bit confused or new to the game. So in any case, anything I say here, just to let you all know, and as my public disclosure states on the beginning and the end of every video, anything I say or insinuate here is just my personal opinion and should be construed and interpreted as education and not necessarily buy, sell, or hold recommendation. And investment decisions should be based upon a investment advisor, of which I am not. So now that that is all out of the way officially, just so that everybody understands that it is just my outlooks here, my setups are strictly just of my opinion and for educational purposes only. It's a sad world that we live in that has to be said, but hey, there are people out there that will screw their own accounts up and then try to turn around and blame somebody else, and that is not going to be on my watch. So, needless to say, here, as you can see, we do have that upside push happening. There is a gap. If you look at your lower time limits on the futures contract, I believe it is. I think you can see it on the 5 minute, but it's definitely on the 1 minute chart. It is a gap at 1488. So upside looking for 1488. That'll put us above this past week's highs, and that'll be challenging here. So that leads me to believe that we are going to be pushing upside more. Now, in the event that we do go ahead and get this upside test moving forward, which again, heading into the end of the year seems very, very probable, I am looking at a test of 1492 to as high as 1497. So the upside is there. Again, as I mentioned, risk reward metrics make a lot of sense here for the upside push. Downside, bears are going to have another headache coming your way here with everything pretty much I've said in this video. So if you're bearish, good luck. You can disagree with me all you want. I might be wrong. I'm not perfect. Again, I'm just using statistics and my own strategies and indications like the fibs for support in my case. Is it possible that I could be wrong? Absolutely. There's no such thing as certainty in this business. That's why we use stop losses and don't bet the max and pull the trigger without protecting our accounts, right? So that all being said, again, I do think that we're going to see, like I said, 1492 excuse me, 1492 to 1495 to the upside here. And that'll put us basically at my 38.2 fib level at 1497. Going to be some chopping here. The bears are going to be fighting hard, but then I do believe we'll see that spring up action above 1500 squeezes to 1510, consolidation around that 1501 level, and then continuation move up into the 1540 area, 1542 to 1545 likely, and then again we'll probably be looking at a little bit of consolidation followed by another yank to the upside to retest and break the highs. And again, in accordance with what I said earlier, looking at around 1600 to 1603 being my estimated target. Not out of the possibility to see us print some 1610s. What's going to make us go up that way? I don't know. I don't know what the triggers are. I just follow what the money's doing. So that's what I'm seeing here for gold. Enough with my blabber and in-depth analysis here that I'm sharing with all of you. I hope you enjoyed it. In any case, if you disagree with me, agree with me, that's perfectly fine. I understand. You trade what you see, and that's the best that any of us can do. In my opinion, from what I see and from the experience that I have, looking at a bullish move here for gold. So let's move along here. Let's go switch it over to crude oil. Now, crude again surprised further to the upside here, and that was basically on the back of a short squeeze with the trade news. And just like with the indices, okay, this is not something that is naturally occurring or moving at this or functioning at this time. It's all just based around the trade talks phase one deal being completed. Now, as you can see here, we've been trying to push up above the trend line resistance, still holding up pretty strong. Closed above that 60 level, 59.90, which is near my 50 fib level. Not the end of the world here, as again the price kind of pulled back very nicely. What am I expecting as we head into this upcoming week? Firstly, I do expect us to retest around 60.60 to 60.70. Don't think we'll be getting much higher than that. It's possible that we do. I have to say that because any trade headline that comes out could again squeeze to the upside, and shorts will get murdered, and again will cause a squeeze to the upside and start testing the mid fib area around that 6150, 6160 area that we put in this past week. It's possible, albeit the probability is a lot lower. So I again stand by that 60 70, 60 60 area should get tested pretty soon and earlier in the week, and then start looking at sideways to downwards movement, expecting a move to come back down and test at the very least that 59.70 level. So we'll see how long it takes to get there. It's, at the end of the year, end of the month, all coming together at the same area. A lot of traders are away already, and the volume is going to be a lot lighter. So who knows? It's pretty much anybody's ball game. Anything can happen. Geopolitical, tension. Something could happen with North Korea, which is already promising, the intercontinental ballistic missiles being tested again. So who knows? So if you're going to be playing this, I would say scalp, on the dips, and be careful on your shorts. Keep those stops nice and tight, because you never know when something could kind of come up. I personally rather see this kind of start breaking down and testing that 59.50 area for further push to the downside, back into the 50 58 level, down to the mid fib around 57.70. So I like to see this kind of confirm that resistance and start breaking underneath the fib before I start getting interested in crude again. That's just me personally. That's just how I roll. I like to see the confirmation. Trade headlines have been just absolutely annoying and relentless and squeezing bodies all over the place. So just be careful. And at this point in the year, there's really no reason to push it. You're coming up into 2020. You might as well start it off feeling really great, rejuvenated, and having spent some nice time with family. Hopefully, you like your family. And then I'm saying just, nice time to just walk away in general. Aside from gold, I really don't see a lot of good opportunities myself. So let's just finish it off here with natural gas, and then I'll wish you all a wonderful week. So, with all that being said, with crude oil, what I'm seeing with gold and dollar, nat gas, again, it tried this past week once more to do something positive. Now, basically, what we're seeing here is just Natty trying to save its face. In other words, again, I'm not changing my outlook here. Basically, I'm just going to elaborate a little bit on what I see happening and where I think we're going. So here's the key levels to watch for. Past few weeks, we were putting in some higher lows, higher highs. Very, very bearish candle here. We got a gap down, and then boom, boom. Broke below the trend line, lower low. Bulls came in again, squeezed back under trend line, gap down again, tested the resistance, and what's happening next is, and I'm just going to move this over a little bit, rejection, looking for a press to the downside here. Now here is where the importance comes into play. Monthly candle view. And if you don't look at monthly candles, it might be time to start. So looking at this overall picture here, last month's candle, again, we closed pretty much on the lows to the exact T. So when you're looking at this, see, as I said, you're just off the lows. Our monthly candle goes red at 2.315. We go sub the lows of last month here at 2.27 roughly. Then we'll be easily testing 2.217, most probably smacking down to test that gap down low around a 2169 level. Beyond that, start breaking lower, it could get very ugly very quickly back down to those lower twos that I've been advocating for some time. So watch the close of this monthly candle. If you don't have a position right now, best to wait and see what happens. Watch that monthly view. You start seeing that monthly candle go red, then you'll know that we're going to go and retest those 2.2. The heck is that number? Uh, 2.27. Break below 2.27. You know you got a quick, easy money trade down to 2.217, then down to 2.17 or 169 ish, and then you might get some chop chop. But then beyond that, there is going to be a retest of those low twos coming up from what I can see. Now, a lot of you, from what I see on the forums, not necessarily what I see commented, some comments here and there about weather models and this and that. You can throw all that in the trash can. And I say that with probably every single piece of news that you can ever get. So some of you were probably sitting there going, why do you say that? Well, I'll tell you why I say that. News is already included into most price action setups. So in most of the pairs that you're looking at, by the time your eyeballs even see the headline, the algorithms have already scanned it and traded off of it at least 1,000 times in milliseconds, hundreds of thousands of milliseconds. High frequency trading, that's what they do. They just read, 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 and it just happens in an instant. So again, news is kind of like whatever. Follow the chart flow, follow what you're seeing as far as price action goes, and then that's how you capitalize on the movements. You go with the money. Don't think that what you're reading is something that a multi-billion-dollar hedge fund that specializes in commodities trading is wrong, because you will learn very quickly that it's you that's wrong. And I say that not to be, Debbie Downer or whatever. It's just the reality. Over the course of my trading career and history, I've just noticed that news is just absolutely crap. I mean, yes, ADP, payrolls does have an initial jolt in the market, but all it does is just speed up where the price was going to go anyway, with a small extension at times. So try it. My challenge to you: give it a try. All right, see if you can trade without looking at any news, just looking at charts, and then compare that week versus the prior week and see how you feel about it. And if it works out for you, go ahead, leave a comment at the bottom of my video. Be glad to, have a little bit of a back and forth. You can, if you don't want to have it public, then just send me an email, thetradersperspective@gmail.com. Boom, I'll be glad to have that interaction with you, and then we can kind of see, what you're doing. Again, no strings attached. I don't want anybody to feel like you have any obligation to work with me or anything like that. I really don't care. It's less of a headache for me. It just lets me focus more on what I'm doing with my own account. So, that all being said, to reiterate what I said earlier in the video, if you're interested, obviously there's no strings attached or anything like that. If you just want to check out what one of my older, like last weekend's member video release entails, the pairs that I cover, what I say, why I say things, shoot me an email, thetradersperspective@gmail.com. Contact info also available on the website. And you say, hey, I just wanted to check out your member video from last week, and I'll go ahead and thank you so much for reaching out, and I'll go ahead and send you the private closed link. So, again, I appreciate all of you for subscribing. I hope you've had a profitable trading year this past year. It's been a heck of a volatile year at times. It's going to be a real doozy coming up, and I can't believe I just said doozy, but that's what it is. A lot of volatility I expect coming up in at least the earlier part of January, and probably going to last a lot longer than that as we start to see, this impeachment stuff happening and all that other garbage that's going to start getting factored in. So have a wonderful holiday. I will put out a video next weekend, and we will go from there. So I hope everybody enjoyed today's video. Green trades to you all.